Hello folks, welcome to the topics. Hopefully this November is going to be green for us. So without further ado, let's jump right into it, starting with the news. Bitcoin just wrapped its worst October since 2014, down about 5% for the month, dipping under the $108,000 earlier this week. Whales and even OG whales, they started taking profits. The ETFs saw nearly $800 million in outflows, and traders actually sold the news. Well, this month we had Fed cutting rates, the US signing a trade deal with China. Everything seems that it was going to be pumping, but that lasted 5 minutes. And then the crash came and the hangover came. The stocks cooled down. Crypto actually crashed multiple times actually this month. But while the retail panic sold their way out, traditional finances are stepping up and getting ready for the next round. We have names like JP Morgan, Goldman Sachs, BNY Mellon. These guys are no longer just exploring the blockchain or just testing the waters. They're actually starting to build on it. JP Morgan actually now lets clients use Bitcoin and Ethereum as collateral for loans, just like you could do on Aave, on other places. My personal opinion is, why would you use JP Morgan in the first place? So this is actually a tool for TradFi guys that want to get into crypto. So you actually heard that right. You can walk now into a bank and borrow against your crypto. Just like, for example, when you go to the pawn shop and you pawn your Rolex so you can spend that money at the casino. Meanwhile, the ETF avalanche is actually real. We have a lot of things happening when it comes to ETFs. We're hearing about filings for multi-asset crypto ETFs. So you have Bitcoin, Ethereum, and many others in a single ETF. This is crazy. Then we have Grayscale, which wants a spot ETF for Cardano. Who even uses Cardano? Then we have VanEck, which has a 100% stake Ethereum ETF, meaning that now your investment is literally helping to secure the network and earning rewards. But that brings down the whole idea of decentralization. And then BNY Mellon, the biggest custodian on earth, they tokenized $500 million in AAA loan funds, meaning that now these things can be traded like stocks, but settled in second using blockchain technology. So yeah, as we're gonna see in the charts right now, crypto is bleeding, but behind these charts, there's a lot of traditional finances names like JP Morgan, Blackrock, VanEck, all these other companies that are positioning themselves to start using blockchain technology and to start using crypto as another form of payment or as another form of monetization. Now, before we look back at the charts, we have to talk about Tron, which together with Tether and TRM Labs, they froze $300 million in illicit funds. So stolen crypto, scams, hacks, everything is frozen. That actually proves my point when you hear Web2 guys saying that crypto is just used to launder money, to promote illegal activities. Imagine how fast would banks have reacted to something like that, or imagine if they even would have done something like that in the first place if it wasn't, covered by the media. So Tron did actually something good. Then Tether actually is making a lot of money. They just reported $10 billion in profit. This is until September. So in 2025 alone, until September, these guys already profited $10 billion with stablecoins. This is actually more than actual banks. And again, all from stablecoins, from digital dollars flying across borders. And this has actually moved Western Union. Now we're hearing Western Union is working on their own stablecoin. And it is to get part of this huge amounts of money made on the blockchain by removing all borders. With Tether, you can just send USDT from one wallet to the other. You don't need KYC. You don't need to know where that person is. You just type in the address and you send that money. And then I did not want to talk about this, but we have to talk about SBF. SBF has a friend that is tweeting on his main account on X, and he dropped a manifesto saying that the exchange was never insolvent. I don't even want to get into this because billions of dollars actually evaporated. We had a lot of people doing a lot of deep research on FTX. So if you are falling for his, baloney story, don't. The guy is actually criminal and he deserves to be in jail, even though if you look on Polymarket, there's a lot of people betting that this guy's going to get released, is going to get pardoned, which again, I would not bet against this because we're talking about the Trump administration after all. Now that we talked about the news, hopefully this format of putting the news first and then markets later works. So let me know in the comments. Let's actually start looking at some charts, and we're going to go first to Bitcoin. So Bitcoin right now is at $107,921. it looks ugly. It does not look good. By looking at the indicators, you can see that it is weak. Bitcoin is weak, but we are still very close to all-time highs. So by waiting on this move from gold, move from the S&P 500, which, by the way, I do believe the S&P 500 has huge chances of getting at least to $9,000 by the end of the year. And if that is true, most likely Bitcoin will be at new all-time highs by the end of the year as well. So that could bring some strength to Bitcoin by having all these other assets doing very, very well. Like we saw gold going all the way to 4,300, then going back down, S&P 500 making all-time highs. I know for a fact that we are getting close to a place where this lag is going to stop and we're going to start seeing movements from TradFi all the way to crypto. My theory is that TradFi is trying to manipulate as much as they can the crypto markets to wipe down retailers. After October 11th, where we had that huge liquidation, a lot of retailers have left the space. I think that this was a manipulation for TradFi to have better entry prices, for all these companies to have better entry prices. And then retailers get scared and they lose so much money that they don't have more capital, or they don't even want to touch crypto any longer. And this is a good place to, wipe retailers and get in with TradFi money. So this is what I hope. And then when everyone isn't ready, this market's gonna just skyrocket and go to the moon. This is my opinion. So I believe that we have been trading close to this range right here, the 105 to 107, for so long that now is the time to, show that we have some resistance and keep moving up and forget about this price range, just like we forgot about the $75,000 when we were ranging at that zone and no one believed that we could reach $100,000. So hopefully this is the next leg up now that everyone's a little bit more scared. If you look to Ethereum is even worse than Bitcoin, honestly. Again, the same range right here, the 3,600 all the way to the 3,800. We're still inside this purple range, which if we hold this range, it's fine. If you look at the weekly, when you start zooming out, you notice that this is fine. Of course, we would like to see everything above this pink and this orange line, which are the moving averages right here. One for the Bollinger Band and one is the 21 moving average. If we don't hold this purple region, we're gonna look all the way to the blue here, which is the 100 moving average, and worst case scenario, the 200 moving average. But I do believe that now we should be slowing down. Actually, let me rephrase that. Please, for the love of God, we are going to be slowing down and then moving back up for the last leg of the bull run. But that being said, if we look at CoinMarketCap right here, the Fear and Greed Index is showing 36 right now, which is right below the neutral zone. So we have to see where that's going to go and how that reflects on the actual price of Bitcoin and Ethereum. Now, before we end the video, let me actually show you the Alt 0DTE vault that has started to do some movement, has started to work and make some trades. We are now at 0.83% here on this one. Actually, the same day that one did, the normal 0DTE did trade as well. So these two traded back to back, but this made a little bit more ROI. So as I said, maybe this one, the altcoin 0DTE, is going to have a little bit more projection in APY because it should have more volatility to trade than just the normal 0DTE. So if you want to check it out, the first link in the description will bring you to the topics and you can deposit right there. We're almost at 70 people right here and almost $100,000 in asset under management. And we actually crossed $4 million in asset under management for the 0DTE. So hopefully we have an amazing month of November for both of these strategies. October, we closed on the 0DTE at 2.87, which after August is the worst performing month for us. But again, October was minus 5%, for example, for Bitcoin, even worse for Ethereum. So 0.287% as passive income on stablecoins is very, very good. So hopefully this was a good video. As always, don't forget to like, subscribe, turn on notifications. If you enjoyed the news segment first, let me know. We can do more videos like this, focusing a little bit more on the news, especially on a Monday, which is when you should, sit down, get ready for the week. And what better way if not by following the recent news? So let me know. Thank you very much for watching, and I'll catch you guys on the next video on Friday. Thank you. Take care. Peace.